All right, back here in Nigeria, the Nigerian banking industry lost 482 billion naira in the financial year ended December 31st, 2020, and that's according to Agusto and Co banking industry report. And this was due to sterile cash reserve funds held by the central bank. Meanwhile, cash reserve fund held by the CBN grew by 64.3% year-on-year, while heightened currency risk concerns led to a 5.2% decline in the banking industry. 15% of banking industry's non-interest income was generated from electronic banking transactions, while investment and FX revaluation gains accounted for 58% of non-interest income in the year ended 31st of December 2020. Non-performing loans declined by 4% and long-term debt securities amounted to 248 billion naira in the full year 2020 and the first quarter of this year. Well, we have Andrew Nevin, the chief economist at PwC Nigeria, joining us to explain the implication of this report. Good to have you, Andrew. Good morning.
Good morning. Great to be here. Thank you.
Yeah, so in summary, what does this report say about the Nigeria's banking industry?
Well, I mean, I think from our perspective, the banking industry is actually in very good shape. And I think what Agusto and Co has said is accurate, but we need to put it in some context. So if you take the cash reserve ratio for a minute, why is there a high cash reserve ratio? I think it's 27.5% of the bank assets. The reason for that is so that we have a stable and sound financial system. So depositors have no risk of losing their money. I mean, I can still remember bank failures back in 2009, Oceanic, Intercontinental, for example. And it was really up to His Royal Highness Mohammed Sanusi II when he was central bank governor to make the heroic efforts to make sure that no depositor lost money. But these rules were brought in to make sure that our system has a real stability. With respect to the decline in the lending in foreign currency, I mean, you can only lend in foreign currency to a company that has a income stream in foreign currency. That's a basic rule of banking. It reflects the decline, the fact that we're not exporting enough. We don't have enough industries exporting things and earning US dollars or euros. It doesn't have really anything to do with the banking system. The banking system is doing what it should on that. With respect to the payment income, 15% of their non-interest income being from the electronic banking. I mean, I think banks should expect that number is going to continue to decline. I mean, we do billions of transactions in this country. I mean, the NIB system is absolutely amazing. The BDN is amazing. And this is all done at a very low cost, right? I mean, so it sounds like a lot of the income, but it's not a very big amount per transaction. And that number is going to zero. I'm sure people have all heard about the central bank digital currency, which is a major innovation. Again, Nigeria out in front. And that's just going to drive those transaction costs even lower for the public and particularly for the bottom of the pyramid. So I think that the banking system is in great shape and we shouldn't be worried about the banking system.
Okay, but losing 482 billion naira income to sterile cash reserve funds, should this be a concern?
Well, it's a trade-off. I mean, you can decide you can lower the cash reserve ratio, which means the bank can then lend more. But of course, then the bank is closer to perhaps going in adverse circumstances to insolvency. So if you go back to 2009, for example, when I was here in early 2009, we made a number of visits, including the Honorable Minister of Finance, for example, and we said there's going to be a financial crisis. There's a financial crisis happening all over the West. It's going to come to Nigeria. People didn't believe us. By June, that had arrived, and the governor had taken over 9 banks and resolved them on that. So if you decrease the ratio, there may be more lending. But the fundamental issue from our viewpoint is, I mean, if you look across the financial services sector, so insurance, investment banking, capital markets, asset management, banking, core banking is doing fantastically well. The problem is that the other sectors are not. So I don't think we should be concerned about the banking sector. The CBN is a very effective regulator, very high-skilled organization. What we need is the insurance sector much bigger. We need certainly the capital markets. Really, we've been saying for a number of years is the core. And of course, one of our most famous bankers, Mr. Modway, has come out and said, very clearly, we need a capital markets that's 10 times bigger on that. So our problem in terms of the economy is not the banking system. People ask the banking system to do things it shouldn't be doing. Long-term capital, venture capital, for example. Those things need to be done elsewhere, and we need the SEC, NICOM to be supported by the federal government, and we need to create those sectors to be as big as the banking industry. If we look at South Africa, for example, I believe the insurance industry is bigger than the banking industry, while here it's, I think, the ratio of 50 or 100 to 1.
All right. Thank you so much, Nevin, for sharing your thoughts with us on the report on the banking industry. And we'll surely reach out to you for more of your thoughts on issues. Thank you so much, and enjoy the rest of your day.
Thank you.
Thank you. Thank you.
So we'll take a break now. When we come back, well, recently the central bank threatened to sanction microfinance banks. Yes, we're still talking about banks, this time the microfinance banks, for going beyond their mandate. What does this mean? What are some of those sanctions that they could get? We'll discuss that after the break. Do stay with us. It's Business Morning on Channels Television.